Hi there, it's 7 p.m. and thank you all for being here. Thank you for joining us in another live webinar with us from Philip Nova. This is your host. My name is Sri from Philip Nova, and today we're going to be talking about a very, very exciting topic. Thank you for making time to join us. Chinese stocks. Is it a glorious rebound or just a short-lived rally? Let me know what you think in the comments box right now. Okay, the comments box is located on your control panel. Is somewhere at the top. It has a question mark shape in there, and at the same time, let me know what you think about the markets. At the same time, I'll be able to know if you can hear me loud and clear. So I appreciate that very much. Um, all right, so after a tough stretch, the Chinese and Hong Kong stocks are showing signs of a strong comeback, right? And the Hang Seng Index has rebounded an impressive 19% year to date. And even the US markets are currently just struggling with a technical correction. With renewed investor optimism and supportive policies from the Chinese government, many of us investors are wondering, is this the start of a sustained recovery or just another short lived rally? Right. So join us for this exclusive webinar with market expert Ming Lam. If you've joined us for our webinars before, you know he's one of the guests that we frequently invite to give us the views on various asset classes and markets. So he'll be joining us in the studio, and he'll dive into the key drivers behind China's and Hong Kong's stock market performance and their rebound. Right. So we'll explore the factors fueling the rebound, the impact of the economic and policy shifts, and whether the momentum can continue. At the same time, Minglan will highlight sectors and stocks that investors should keep an eye on in this evolving landscape. So, add the stock to your watch list on the Philip Nova 2.0 platform, monitor the stock, and, take a view if you're keen to trade. And yeah, so if you're looking for insights on how to navigate opportunities in the Chinese markets, just stay focused, be right here. Already done the hard part, which is turning up for this webinar. So just stay tuned and hear the insights from Ming Lam as he goes through his deck later. All right. So key outlines for today: what's driving the rebound in China and Hong Kong stocks, the role of government policies in shaping market trends, and key sectors and stocks to watch in 2025. Okay. Hi, I just want to confirm if you guys can hear me loud and clear. Just type in the question box at the same time if you can hear me. Yes. If you can hear me clearly during the webinar, if you have questions for our speaker, you can also type them in the question box. Just a little bit about our speaker, Ming Lam. He's the Trading Central Deputy Head of Research for Asia. He's very, very experienced. Earlier, before his career, he graduated from the University of Hong Kong with a bachelor's degree in engineering, and currently a responsible officer registered with the Securities and Futures Commission of Hong Kong. He has been engaged in translation and research operations in the financial services industry for over 10 years. In Trading Central, Ming specializes in technical analysis of stocks, foreign exchange, and commodity markets, with the goal of providing customers with independent and superior market insights. And Ming, as I shared earlier, is a regular speaker for Philip Nova's webinars. Okay, before we hand the time to Ming Lam, I just want to reiterate that thank you, Ki Lim, and Bing Chua, thanks for verifying that you hear me loud and clear. Remember, at any point in time during the webinar, if you have questions, you can type them in the question box. Okay, you should be able to find it at the top of your control panel. It's the box with a question mark on it. Okay, and before we hand the time over to our guests, we're gonna hand the time over to Rebecca. Rebecca is from Trading Central, and she's gonna walk us through the various tools, Trading Central tools that you can gain access to when you're a customer of Philip Nova. Okay, Rebecca, if you're all set to go, I'm gonna hand the time over to you, Rebecca.
Okay, thank you. Right. So thank you for introducing and welcome to the Phillip Nover's webinars with Trading Central. This is Rebecca. Today I would like to take this opportunity to briefly introduce Trading Central, show you where you can find a product with Phillip Nover and how to use it. Trading Central was founded by a team of experienced analysts in 1999 in Paris, and now we have teams in our license globally, including STA, CMT, and Hong Kong Stock Exchange. We are specialized in technical analysis, and technical analysis believes that price can reflect of the information from the market. And Trading Central Indicators plugin is designed to help traders make profitable decisions trading for five. And it's a unique indicator which allows traders to see Trading Central levels and strategies directly on the live chart. Now you can find the live download link on the Phillip Nova website. If I go to Phillip MetaTrader 5 Suite, it will come to here. And if you click on TC indicator, which means Trading Central, this is where you can find to download the Trading Central indicators. Now I've already installed on my MT5 with Phillip Nova. So on the left hand side, you'll be able to find Trading Central with the indicators here. All I have to do is double click, or I can drag and drop to the right hand side in order to see our analyst views. We are then able to find what is the house view. Now this is, for example, for this particular Forex pair, we're thinking its preference is decline, where the live price is right here. S1, S2, and S3 is the target price, whereas pivot point, meaning if the price reaches to the pivot point, we think that the environment might change, and therefore pivot point is normally used as a stop loss point. So you will have all the target price and the stop loss and the alternative scenario here as well. If you need more information, you can actually expand a little bit with the box below, and where you can find where's a pivot point, where's a preference and a scenario. Now let's say if I'm a person that who likes candlestick more, I can actually drag and drop candlestick onto the right hand side again, click on OK. Then I can find different kind of candlestick here. If you hover the mouse on it, it shows you what is the indicator. Basically, if it is above the indicator, it is a bearish signal, and where this is a bullish signal with the blue one. And if here, it's easier to look at it. For example, if I'm a candlestick person, I can see the latest stick is actually reversal, as in a bearish signal, and it actually aligns with Trading Central house view, so it might be a better indicator where if I should enter the market or not. On the other hand, if I'm more a MACD person, I can actually first remove the candlestick because it might be a little bit too clunky. I can actually just drag and drop ADC, adaptive convergence onto it. So this is where Trading Central makes RSI and MACD together. And then I can actually see when is an opportunity to enter the long or short positions, depending on the color. And I actually move the mouse onto it. Again, I can see the details of it and when to exit the positions. We can always change the time frame as well on the top left corner, if we want some shorter kind of intervals for it. On the other hand, we can actually find Trading Central here at the expert advisors here. So if I double click onto it, I'm then able to find a few more tools that Trading Central is made available on Phillip Nova platform. I recommend you to look at TC Market Bus, which is basically a new sentiment tools that you can find. We use Spectator and AI to really read through the news and really give a overview of what kind of sentiment we have across stocks, cryptocurrency, and commodities, and even indices. So, for example, we're now at stock, and we can see that the most buzzing one is Apple. And if I click into it, then I can see how buzzing it is, what's the sentiment of it, and different kind of trend analysis as well. I can then actually look into economic insight. If I'm more a person who likes to trade with calendar events, for example, what's the most recent events happening there? I'm just going to skip. You can actually read through the tutorial as well. And then once I click on it, I can see different charts and different kind of forecasts and previews as well. Last but not least will be the Forex feature ideas. You can always go to custom settings and select your favorite kind of currency pairs. You can choose your bar size and your holding time frame. And I would recommend you to look into classical patterns, which gives you a direction on what kind of patterns we have, and therefore gives you a direction of the forex pairs. Now, and then it will gives you, for example, it's increasing 1 pips in here because this is only what a pattern can tell you. With a double bottom that we can find in here, it shows that it is targeted to be increased with 1 pips. You can actually read through here. So when this pattern has been found and what is the target price for up to a different kind of time frame in here. So these are the different kind of forex opportunity that you are able to find. So this is really a brief introduction to what we have available on Phillip Nova. Please feel free to download it, and it's really a excellent tools if you want to help with your trading decisions. Okay. All right. Thank you for your time. Next, I would like to pass it back to Sui.
All right, and now it's time for the main event. Is Mr. Ming Lam, who's going to walk us through the insights for the Chinese and Hong Kong markets. Ming Lam, if you're all set to go, I'm going to give you presentation rights right now.
All right, thank you, Sri. And ladies and gentlemen, good morning, good evening, or good night, and depending on where you are. And every time I'm going to share my market observations and my opinions with Philip Lover audience. It is just a great event. I find it happy to do so. So today, like my past events, webinars, I will be to the point, concise to the point. I will just get across to you one or two key points, and then I will let you carry on with your nighttime activities. Okay. Now, I will talk about Chinese Hong Kong stocks today. Okay. And most of the top stocks I'm talking about could be found on Philip Lover's trading platform. Okay. Hope you enjoy it. And now, today, yes, I'm going to talk about Chinese Hong Kong stocks. But forgive me, please forgive me. I have to twist a little bit about our arrangement today. Okay. Why? Why? Because of this thing, the tariff. Okay. It just happened last week or 1 or 2 weeks ago. Okay, after we prepare our webinar our night, and this one is bigger than this event. This one, tariff war, is bigger than everything we have prepared. So I will bring up the most important points to you. Okay, and still we are going to check out some Chinese Hong Kong stocks. Okay, let's go. Now, as always, I give you my conclusion at the first. All right. Now, we know that everyone knows that US and China is in a trade war. No one can deny it. Okay, it is a giant market mover, and on the US side, I think the US stock market they dropped 10% in 2 days. Okay, I think it is overdone, and I expect US stocks to rebound later. Okay, I will spend a little bit time on this one if you like. And then our main characters, China, Hong Kong stock markets, not very good, I can say. If you expect some good news from me today in this event, you may be disappointed. And let's see. Okay, and the most important thing is U.S.-China relation. Okay, not good, not good. Let's go. Now we know that April the 2nd, President Donald Trump called it a Liberation Day maybe just 2 weeks ago, right? And where is my pointer? I get my pointer first. Okay, this one. Now, before, uh, after he was sworn in as president, Trump has already raised 10% tariff on some countries, including China. And then on the Liberation Day, April 2nd, okay, 34% tariff on China. You know what? China is not showing weakness, 34%, okay? And then Trump say, okay, you get me 34, I give you 50. And then China follow, blah, 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 blah. And then the trade war just escalate. Now, at this moment when I'm talking, you are listening. U.S. tariff on Chinese goods is 145%. In fact, you cannot do business with this tariff rate. At the same time, China is charging tariff 125% on U.S. goods. Okay, they are fighting. Clearly, they are fighting. Okay, the situation is. Let me talk about the U.S. first. Okay, now U.S. stock market we see a swift decline around this tariff war, blah, blah, blah. You can see that. First of all, I have to say that today's the charts, I'm using 1-day chart. It means the one bar on this chart represent the trading open, high, low, close of 1 day. Okay, easy, right? In fact, the Nasdaq 100 index, the tech index, okay, has corrected for 26%. It is huge, I can tell you. And after that, it rebound. In 1 day, it was up to 12%. It is the biggest rebound in maybe several decades. Okay, I am bullish on U.S. stocks. Okay, I'm bullish. So I think going forward, the rebound will continue. Okay, its record high is around 22,000 level. I think it will go back to that. Why? I would tell you. I will explain to you. S&P 500 same correction 21%, and then a swift rebound. Okay, its record high is at over 6,100. Okay, if you are following my webinars, you know that there is one factor, key factor, driving my bullishness on U.S. stocks. It is liquidity. It means the capital flowing in the market, buying stocks, buying risk assets. Okay, and don't look over there. Look here. Now this is we are seeing the liquidity cycle is on the uptrend. Okay. Okay, so in the fourth quarter of last year, it was done like this, and it was increasing now up to previous level, and I expect to see liquidity to expand further going forward this year. Yeah, most of the time it will be this year. We are going to see expansion of liquidity. If we see liquidity expand, stocks and other risk assets like what risk assets, Bitcoin will rise. All right. Next, same. This is the superimposition of the liquidity along with Nasdaq. Okay, the Nasdaq's growth. You can see they are well in proportion. Okay, I expect to see Nasdaq to rebound further. There is the reason. Okay, this is the small part of today's webinar that I'm talking about U.S. stocks. On U.S. stocks, I repeat, I am bullish. Next, now back to tariff. Okay, have you read this book? I read I read this book several years ago. It was written by our President Trump, The Art of the Deal. If you are serious about trading Hong Kong Chinese stock, you have to read this book too. Why? This book is very interesting. It tells us about his dealing with government bureaucrats and his growth, and also one thing I still remember very firmly. One thing Trump said that in this book, if someone is harsh to you, you have to be harsh to them 10 times. Okay, I repeat. I repeat. Someone is harsh to Trump, and Trump will return 10 times the harshness. Okay? So why this is important? This current situation is the application of this philosophy of Mr. Trump. Now, this is the trade difference between the U.S. and China. You can see that after 2000 and 2001, as the China entered the WTO, it has been gaining much trade surplus from U.S. This is a U.S. export like this. This is a U.S. export import from China. Okay, you can see has been earning big time. I mean, China has been earning big time from the U.S. And this is what Trump doesn't like to see. He will fight back. Okay, and these are the different kinds of goods that China importing to the U.S. You can see game console, PC monitors, toys, smartphones. We have a big base making Apple iPhone in Shenzhen. I don't know if they are still making it under such a big tariff. Okay, battery, laptops. Okay, yeah, battery. Look at this, and I will tell you later what other products China is making big time. Okay, now I said before, Trump will be very harsh to anyone that is harsh to him, right? Well, do you remember this moment? I remember it very firmly. This one was taken 5 years ago, okay, in January 2020. It is the first trade deal Donald Trump struck with China. Okay, okay. So remember, January 2020, and then after this handshaking, after this contract signing, what happened? Can anyone answer me? 2020. Do you still remember the word COVID? COVID. All right. Yes. After January 2020, COVID enter the US. And we have a global pandemic, and US, particularly US, the economy just turned upside down, and the US had to print a lot of money and paving the way for huge inflation later. Okay, so now Donald Trump say, I don't know if it is correct or not. He always say COVID is a China virus, and he will get back to get even with China. I'm quite sure. All right, by what? By tariff, by trade war. Okay, now back to something that maybe you are more interested. Hong Kong stocks, China stocks. Okay, Hang Seng Index. Now, at the original outline of our webinar, we talk about the government policy back in last year, September. Okay, the Chinese government just announced that it will support. It point out very directly, very clearly that it will support the stock market, equity market by lending out money, printing money, also what? Okay, and after that we see in Hong Kong, it was a surge. Okay, in September, end of September, and then October, we have a huge rebound, and then it will fade out, and then afterward it fade away. And how about this year? The start of this year, we see a rebound. Okay, 33%. 33%. What happened then? Now, it is because the Hong Kong stock, the valuation PE, it was then about a 10 or 12. It was still cheap relative to the US stocks. Okay, we saw international hedge funds coming back to Hong Kong and buy stocks, and this was the surge. And then after that, in this month or two, we gave back almost all the rebound. What happened? This is the tariff war. All right, and still we are seeing a bearish gap here, not yet filled. Okay, so currently we are still bearish on the Hong Kong stocks. Okay, key level, this is a key resistance, 22,600. Only if the stock index rebound back up to this level could we be bullish again. Okay, and momentum indicators are still going nowhere on this way. Okay, so this is the story of the development of the stock market. Okay, the price journey of this year or so in the Hong Kong stock. All right, and you ask me why you're still bearish, because of the tariff. Okay, the tariff. Most company listed in Hong Kong are Chinese business. Okay, if Trump has singled out China for trade war, I don't think those Chinese company could fare well going forward. Now, tech stock Hong Kong. All right, we have a 31% correction. Now, Hong Kong Hang Seng Tech Stock and Hong Kong Index, they are Hong Kong stocks listed in Hong Kong. Now, how about China? You can see that after the rebound, the surge in last September and October, the index has gone nowhere, range bound in this way, just like a leaking air balloon. All right. So at that moment, I have to be bearish on this one, because so no sign of any rebound momentum. And of course, I will talk to you later about what the tariff means to China and Chinese company. All right, CSI 300, the blue chip, okay, index for China. How about Shanghai? Same, you can see, same pattern, surging in September, October, and then range bound like this. Okay. Now this one, maybe some Singapore clients, some Singapore audience member are very familiar. The China 850, just like the Shanghai index, just like the CSI 300. Okay, still range bound. As you can see, Hong Kong stock is much stronger in this regard. All right. Okay. Stocks. Hong Kong listed China company stock. Okay. Alibaba. Well, we have a lot of in tech stock in Hong Kong. We like the tech stock in US. We enjoy at the start of the this year. We enjoy the good news of what artificial intelligence, AI, DeepSeek, right? Every company of every major Chinese tech giant is developing very good AI. Well, in fact, I have to say their AI is not bad. Okay, but one thing, the U.S. tariff is breaking all those dreams. Okay, and at the moment it is still on the downside. As you can see, the 20-day moving average, this red line, has just crossed below the 50-day moving average, and not a good sign. not a good sign. How about Tencent? Almost the same pattern. All right. All right. Yeah, we have a still there is a bearish gap not yet filled. We would like very much to see this bearish gap filled when the stock rebound, but not yet. Still, there is a bearish gap. Still, uh, uh, we are bearish on this one. All right. Xiaomi is a very wonderful stock. Okay, in 2023, 2 years ago, 1 year 43%, last year 120% up. Okay, this year up to the record high $59 something. It was up 72%. But just like other tech giant, it is on the downtrend currently. Okay, so you can see we have government support on stocks equity. Government say, hey, I will lend money to institutes to buy stocks. So and you think the stock market should be up back in last September, October, right? But when Donald Trump uh, got into his pace and issued tariff policy, everything changed. Everything changed. Okay. Now I know that some of the audience members are very keen on this talk because for some past webinars, after the webinars, they wrote emails to me asking for this talk, about this talk. Now, this is called semiconductor manufacturing, okay? And it is still on a downtrend after hitting a record high back in February. Okay, but now it is on a downtrend. I would not rather not to touch to be bullish on this stock at the moment. Okay, this company, Semiconductor Manufacturing International (SMI), it can only make exported integrated circuit. I mean semiconductor up to certain level, due to some policy, and I mean its market is confined to maybe some areas, some countries only. Okay, let me say this: the best semiconductor stocks are still found in the US. All right. How about next one? Bank, our different sectors. I will give you different stocks from different sectors. Like bank seems to be holding up quite well. I mean the rebound is quite obvious this day. Okay, and but we need to see this stock back up to this key resistance level. Then we will turn bullish. Okay, bank stock in Hong Kong. I mean the Chinese bank. How about Chinese insurers? Ping An, okay, same. We are experiencing a persistent bearish gap which has not been filled. Okay, we like to see it to be filled. Okay, and also the moving average are not moving well. All right, yeah. Well, back in September, October last year, it was doing good, but now not good. How about real estate? And maybe you know that real estate stocks in China, or I can say the real estate sector in China, has been in a dramatic downturn for the past 2 years. And this one, China resource land, seems to be holding well at the moment. Okay, a key support is at this one, 23.2 Hong Kong dollar. Okay, sorry for my drawing on this one. At last, I would like to point out my favorite stock. If you ask me, hey, Ming Lam, which stock you like most? This one, BYD. And you know what BYD does? Yes, making battery and making electric vehicle. It is a great rival of what? Tesla. Okay. How about in Singapore? I don't know what the situation is in Singapore. In Hong Kong, we have a lot of China-made EV. Okay, we have a lot of brands, Chinese brands, selling EVs in Hong Kong, and I can tell you, they are not bad. I mean, the quality, they are not bad. Well, before, well, if I say, which car brand do you like? Do you like a car brand made in China? No, no, you say no, 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 no. I like a BMW. I like Mercedes Benz. I like all Japan's Toyota. They are the biggest. But now in electric vehicle, the Chinese are very good. I can say, okay, and in fact, the Chinese EV makers, they had great plans to expand worldwide before the tariff. Okay, now I can say, or maybe I can say, expand into the US to sell into the US. But after the tariff, they have to withdraw their plans. Okay, so that this stock just hit 426 record high back in March, not long ago, and then it took a downturn, 27% correction. It is big. It is big. At the same time, you can see that its rebound is also very strong, powerful. All right, this one. I in Hong Kong, we see a lot of BYD electric cars. I can say they are good. All right, and any car lovers here. Sorry, I have to stop here because if I talk about cars, I will talk for hours, and maybe we make another webinar just talk about cars. Okay, now I can say BYD not bad, but same. We have to treat it with caution. We have to be cautious on trading or on the investing in these stocks because of what? Yeah, tariff. If it cannot enter the U.S. market or other big market in the world, it could be in trouble. Okay. One point to show you here. BYD, the green one, it is the red one is Tesla. Okay. Back in 2023, 2 years ago, in Q4, it it uh, it sells more car. It sold more car than Tesla. Okay, and yeah, you can see it is a real EV giant in China. Okay, now we have gone through the index, China, Hong Kong stock, sectors, and also individual stocks. Let's come to this. Now, what do you think going forward? This trade war, this tariff war, will develop into? Scenario one, we are going to see Donald Trump and China, our presidency, shaking hands and saying we are friends forever. Okay, scenario one. Scenario two, the US and China keep fighting each other. Okay, not forever, but for a long period of time. All right. Now, one point that I have to point out is it is very clearly that the US or Donald Trump has singled out China for this fight. At the moment, Trump say all tariffs on other countries except China will be suspended for 90 days, 90. At the same time, and he will make deals with all these countries. Okay. Hey, I sold you the book, right? The Art of Making a Deal, right? Okay. Whenever Trump say making a deal, it means that you obey his orders. You obey his terms. Okay. And when be careful, be very careful when Donald Trump say, "Hey, we have a very good relationship. You are my best friend. You are my good friend." Blah blah blah. Something like this. It means that you have to pay for the lunch. Something like this. All right. And it is very uneasy to see that Trump has singled out China for this fight, and he has not backed down. He has backed down for other countries, but not China. Okay, it means he's serious, and this is what we would like to see. Okay, the U.S. may proceed to delist Chinese stocks list in the US, just like Alibaba, just like Pinduoduo, PDD, something like this. All right, we have a lot. I think it should be over 1,000 stocks, China's stocks list in the US. It will be huge if it is true. Okay, of course we don't want to see that. And wow, we It is a very interesting time, ladies and gentlemen. We are seeing a turn in US policy. And just like an aircraft carrier, once it has turned, okay, it will not turn back very soon. I repeat, if it turns this corner, it will go ahead and not turn another corner again. It means if the US has turned to be very hostile with China, it will keep on being hostile to China and to Chinese business for a long time. And so it is a little bit sad, but I have the responsibility to tell you my observation. All right. Now, before you go, I give you three or four more bonus track. Okay, US dollar. We are witnessing the US dollar index. It means the US dollar falling rapidly. Okay, this is what the Trump administration wants. This is what they want. Okay, and they keep the currency down, and then it will be more profitable to make deals, to do business with other countries or exporting to other countries. Well, the situation is just like the Plaza Accord back in 1985. Whoa, 40 years ago. Okay, they asked Japan to appreciate their currency, the yen, and you know what? The Japanese stock market crashed and has not gone up for 25 years or so. Okay, ladies and gentlemen, we are witnessing another historic event like this. All right. Second, we are seeing a tariff war, and we are going to see a political war, and not long later, we are going to see, I predict, we are going to see a currency war, okay, between China and US. This is US against the Chinese yuan. Okay, it reached a record high 7.429. Well, a few days ago, record high. And you know what? China is not stupid. Okay, and I think China will know how to play this war. I mean, currency war. All right, and gold. I know some of you are playing with gold. It has been on a what record-breaking rally from year to day. Okay, there is a saying that the Chinese government, it keeps buying gold and to drive up the price, something like this. I don't know. I don't know the true story, but I have to give you a warning that gold price, after making record high and record high level, now it has got up to levels above the Bollinger Band. Okay, what is Bollinger Band? This is the Bollinger Band. The gray one, can you see that? The upper band, this upper line of the band, the lower line of the band, the gray one. In theory, 90% of the trading activities, of the price activities, happen between these two upper band and lower band, upper line and lower line, within this band. Now gold price has overshoot the upper line. So I would not be surprised if going forward 1 week or so, it will make a larger correction. Okay, consolidation to the downside. Okay, so be careful. And the last one, if you like physical gold, how about Bitcoin? We call Bitcoin a digital gold. Okay, it has just marked a record high back in January, nearly 110,000. Okay, like all other risk assets, it has corrected. Okay, now it seems it is going to break up or down. So in which way do you think Bitcoin is breaking up or down? Okay, I'm the host. Let me say it. I think it will break up. Okay, up to the upside. Okay, so you know what? The U.S. has already set up a strategic Bitcoin reserve, and all other countries and most of the other countries will follow. At the same time, there is a trend that listed U.S. companies, they are buying Bitcoin as their asset. Okay, so this is the trend that you has to watch closely also. Okay, thank you very much. This is what key points I want to bring across to you today. So from now on, let's discuss. Okay.
Yeah, thank you so much for your insights, Ming Lam. By the way, I've been thinking. I mean, I'm not a hardcore enthusiast with cars, but I've been noticing the streets because I'm fairly bullish on the EV sector. I do notice lots of Tesla and BYDs in Singapore. Let me know
Oh,
if you are observing a similar trend, members of the audience, where you're from, right? You can type them in the question box. If you
so
have any other questions,
are you a car lover, Sri? You a car lover? You like car?
yeah, but I don't know enough details to be very technical. I
Uh-huh.
mean, I do like my cars, like the colors, the design, certain brands, of course. Yeah.
Yeah. These days, the Chinese ones are good stuff, I can say. All right. Any question?
I'm not being I'm being impartial here, but I must say the BYD looks really, really pretty on the eye. All right. So, talking
Yeah.
about BYD, we're gonna have a first question on BYD from Alex. Alex is asking, Ming Lam, could BYD have a potential head and shoulder with the threat of U.S. tariffs uncertainty? Would you be able
Head and
to
shoulder.
maybe, yeah, jump to the chart and show us.
Let me go back to the chart. Okay.
Okay, the
Uh,
questions are coming fast and furious now. Thank you, members of the audience, for keeping Ming Lam occupied.
can you see my chart? Oh,
I can see any questions. I don't see your chart yet.
how can I show my chart? Give me just one second. One second.
Sure.
Any question? Yeah. I have to go back.
Ah, I see now. I see now. Yeah,
See what
I
the
see it
chart?
now. I see the chart. Yeah,
What chart?
I see US dollar index turning
Okay.
point.
Because okay, BYD, right?
Yep.
Head and shoulder. This. This gentleman should be a very keen technical
Mm-hmm.
analyst like me, and I think he's doing better than I do. And head and shoulder, yes, yes, but we are going to see there is a lag now. This up move. If we're going back down, we have to see that it crossed back below this level, 315, to confirm head and shoulder reversal. Now, this gentleman, maybe other audience member may not know that head and shoulders like this one is a reversal pattern. Okay. Uh, uh, Now the movement is up, but after the head and shoulder, it will be reversed to the downside. There is chance, but we cannot say so at this moment. It's a little bit early because we have to draw another lag line. We call it neck line here, something like this. If it cross the lag line, then that will be a head and shoulder, but not yet confirmed. Whenever it is not confirmed, we won't say that it will happen.
All right. Okay, members of the audience, thank you so much for your questions. It's making it harder for me to pick a few questions that we can answer now. Okay, I'm going to focus on the China and Hong Kong markets because that's what we're covering today. For the rest of the questions, I'll send an email to Ming Lam and get his short answers so we can provide them to you in the
Yeah.
follow-up email. Okay. All right. So let me see what do we have. Okay, as a result of the current tariff, okay, this question is from Kim Loon. Kim Loon is asking, as a result of the current tariffs in 2025, what's your view of the Hang Seng Index for the rest of the year?
Good
Or
question.
maybe if you want to do a short-term view, you can as well.
Okay. Sweet. I don't know why I cannot go back to the chart. Let me see. Mhm. Let me give me. I want to get back to the chart so that I can. I can.
Sure, no problem.
Yeah, here.
Okay.
I got it. Head and shoulder. No, Hansen. Can you see Hansen?
Yeah, it's Hang Seng.
Yeah,
Yeah.
yeah. Okay, good. Now, the question is, what do I predict or expect to see Hansen
Mm,
for the rest of the year? And it is the theme. It is the big theme of our webinar today. Okay. Uh, the tariff war. We can safely say that the tariff war is now singled out between the U.S. and China, and we are going to have a lot of uncertainties on this regard. Well, do you mind saying that China is on the weak side on this fight? Okay, so I don't know what will eventually result, but I can see that at the moment, the U.S. is playing an upper hand. We are not going to see U.S. to back China to reduce their uh, tariff on U.S. goods, right? We can see that U.S. is having an upper hand, and China is on the weaker side. Okay, the best result on this trade war is China China compromise, agree to the terms of the U.S. But as I told you before, that will be a huge price because Trump will not make it cheap. Trump will make it very expensive. And before that, it will exert a lot of pressure on China. And these are all negative pressure on also on the Hong Kong stock market. This is what I see. So going forward, I still using this one, huge uncertainties, and I'm bearish. Okay, I can tell you directly, it is I see on the downside.
mm. Okay. All right. Thank you so much for that answer, Ming Lam. All right. Let me look through the questions again. We'll probably wrap up the session with a goal question since
Oh
we
yeah,
have time.
all
But
right.
now let me pick up something else on the Chinese market. Okay. Okay, let me give you a double barreled question. Let me combine EG's
Okay,
question with something from Kim Loon. Okay, EG's question is asking, Bing Lam, please elaborate why you're bullish on US equities. That's one. The second
okay,
one, which you could lead up to, is maybe would you be able to highlight which sectors investors should keep an eye on amid the backdrop of the current tariff war?
okay, cool. Can you see my last 100?
Nasdaq 100, yes.
Yeah. Uh, why I am bullish on US stocks? Um, in fact, the US stocks at the start of the year, uh, its valuation, PE ratio is quite high. Let me show you S&P 500. It was around 36 times PE at the start of the year, and we were expecting a correction, but not this magnitude. Okay, this correction, 21% correction, and the last 126% correction. The correction, the extent is much bigger than what we expected. Then, okay, it is overdone. Rather you say it is due to whatever reason, due to the tariff reason, blah blah blah. The correction is overdone. Okay, and we are expecting a strong rebound from there and record high. I'm still well. Let me say this: all these stock, U.S. stock index getting back to record high will not be difficult. It will be easy. Okay, and why? Um, just like what I said in the previous webinars, liquidity. We are seeing money flowing inside. Okay, so US is still, I don't know if you like it or not. Uh, you like it or not? I have to say, US is still the most powerful country in the world. Okay, it is still the financial capital of the world. Money will go there, and US dollar, it will not disappear. Okay, so people will go to the strong one. Okay, a strong system like the US. So I'm still bullish on US market. Okay, liquidity. Remember, liquidity. It will drive up risk asset, including stocks, including what Bitcoin. Okay, and other question. Second part of the question is what sector, right? See, and I
Yeah,
can,
what are
I
some
can,
key sectors we should look at, Ming Lam?
yeah, technical technology sector, Nasdaq 100. Okay, I can tell you, two major sectors are dancing along with liquidity. If liquidity expands, these two sectors will rise. Okay, one sector is what? Tech, technology, technology sector, and second one is Bitcoin. And yeah, so if you want to focus on technology, the big names, I think they are overdone. Nvidia, have you heard about the stock Nvidia AI chip stocks?
Oh
It,
yes, our tech darling from the US.
Ted Darling is a good name. Yes, it is fell across $100, and now it is back up to 110, something like this. It is overdone. It's really overdone. So it is good time. Well, well, if you are exercising caution, it's good time to buy the dip. All right.
I see. All right. Thanks for that, Ming Lam. Okay, that's Ming Lam's views. Okay, I just want you to know, as investors, we need to try to we need to do our best to stay impartial because we're just looking out for opportunities in the market. And I think Ming Lam brought up a very good point that liquidity is a key thing that we're looking for when we are investing or trading in the markets. Okay, so we're not picking a side here. It's just following the money, following the liquidity. That's what we should do as investors. Okay, so on that note, let me just ask Ming Lam our final question of the day, just to wrap up nicely with gold, because I think gold prices have been, well, not say threatening, but have been teasing us with multiple highs in the recent times. So what's going to happen next? If the USD continues to be weaker in a lower interest rate environment, and it is very likely that we could see interest rate lowered from 2 to maybe 4 times. Uh, where does this bode for gold?
Good. Thank you for your question. And yeah, I think you're also correct, Sri, talking about the relationship between the U.S. dollar and the gold. And you know what? U.S. dollar and we are going to see U.S. dollar dropping like a stone. It has started already, which is very good for gold price. As gold price is expressed in U.S. dollar, and I see gold is going to climb much higher, much higher. But you know what? It has been making record high after record high, and I think a pullback or a correction uh, could not be avoided in the short term. In the short term, but longer term, as long as U.S. dollar is going on the downside, gold still has upside potential. And another point I want to point out, I haven't made a slide today, is the U.S. Treasury yields. Okay, U.S. Treasury yields, they are dropping. They will be dropping. Okay, particularly the 10-year yield. It is now 4.4, 4.3, something like this. It will drop. Okay, you know why? Because think about what sector will benefit from lower interest rate. I mean lower bond yield. The real estate sector, right? So do you know what Donald Trump's family is engaging in? Okay, so just my imagination. Okay, just my yeah combination, and I expect US dollar to drop, the bond yields to drop, and gold to maintain a high price. Okay, and of course, you now, if you are living now, it is 2025. We have to also consider, or we study something called digital gold, the Bitcoin. All right.
Yeah, Ming Lam, good point that you brought up there. I mean, looking at the Singapore market performance today, some of the best performers today looks like REITs stocks in the index seem to be doing well. So I won't be surprised if we expand it to the global markets. We could see similar trends, but of course, um, um, put the stock in your watch list, keep a close eye on movement, and then maybe when you're ready, or you have a view, you can exercise that view. All right, thank you so much for the valuable insights, Ming Lam, and thank you for being here once again. We look forward to having you next time.
Thank you. Thank you very much.
And members of the audience, I'm so sorry if we didn't pick up your question today. We had so many questions. I'm really thankful for the great participation. I'll do my best to consolidate them and try and get some short answers from Ming Lam. So at least you have the views from our in-house. I mean, for our special guest. Today, Ming Lam, and at least you will be able to bounce and get a sounding board for your views as well. All right, thank you for being a wonderful audience. That's all the time we have today. We have more webinars coming up later this month, so we look forward to seeing you there. Thank you so much, and have a great night, Ming Lam, and our members of the audience.
Thank you very much. Goodbye.
All right, goodbye.